Warm welcome to Positive Trader. We are now gonna look at the charts. The charts, they are a bit of difficult for some to understand, to some to really know what's going on with the charts, because the charts, the simpler way for you to understand the charts is that they represent a price. That's it. They represent price. They represent price, just like your bank account. What you're doing, let's say you deposit money, and then you will have a graph of how much money you're spending, how much money you are depositing. That's how the graph is made of the charts of the market. The first thing that I've explained on my previous video is that you have to understand currencies. And now if you understand currencies, you understand the blue and red. We now have what's called a process of understanding. We now, you and me, because I'm learning with you, I'm teaching you at the same time, you are now understanding that I have currencies, I have the blue and red, which is the number of the price, and then I have what's called a spread. A spread is the profit of the broker. That's now a process of understanding. And now we have to open the charts. The chart is just a graph. So now the graph here, what you see here, the first thing that you have to understand, you have to understand time. You have to understand time. The time is, for example, as you can see here, with GBP USD on top, and then they have H1. H1, it means to represent 1 hour. H4 represent 4 hours. H3 represent 3 hours. H15 represent, as you can see, it's here. H15, H5, H1 represent 1 minute. MN represent a month. W1 represent a week, 1 week. So that's how this thing happens here. Understand the time frame. This what is called time frame. The time here represent also it goes with the time. It goes with this candlestick, which is called this candlestick. We can call it a bar, whatever you can call it, Mara. But this is a candlestick. So as you can see here, this what I'm using here is called crosshead. Here is a crosshead. So this crosshead here, I'm showing you that this candlestick that you see here, this one candlestick is 1 hour. It's 1 hour. After 1 hour, it's gonna close. After 1 hour, it closes. After 1 hour, it closes. After 1 hour, it closes. And then on my right here, you can see the number 1.38671. That number is the representing of the level. It goes in hand with the candlestick. As you can see, the candlestick here is moving at 1.38527. That's where the current price is versus USD, pound versus USD, which is GBP versus USD. That's where the current price is now. They are busy trading, they are busy making transactions and all those stuff. Now you understand this part of the left hand side. We have the numbers, which is the same price. Let me go to Zai and explain the very same thing. You can see here on the left of the screen, as you can see here, looking at it, we have 14. Let's use the crosshead. We're at 14.65, 34, 2. That's where the current price is at this moment, and it's moving. So this candlestick is in 1 hour. If you can go to 4 hours, we can see it at 4 hours like this. We can see it at 4 hours like this. That's the first thing that you have to understand with this thing of Forex. The blue and red is the same as outside here. They are minusing this number, which is red, to the blue, or the blue to the red. So that's how they are minusing this number, and then they get a spread. The spread, remember, it's a profit for the broker. That's why if you can sell now, you'll be in loss. Or yes, you'll be in loss, or you'll be in loss until the market moves from that point, and then it gives you profit. So they will always profit with you. Remember, now it's FX View, the broker that I'm using. All right, we are moving along. I believe that I've explained that one very well. I can repeat it again. Remember, understand time. Understand the right hand side, the number that is moving, which is the price. This price is the one that is showing you where we are. And then it will also help you to understand how you made a loss, how you made profits, how you made profit. To understand how you make profit is very simple. Let me explain. I'll explain with point A and point B. For you to understand that profit is lost, how you can make profit is like this. We have point A. Point A, it's here. And then point B, it's here. It's an example that I'm making. We are in 4 hour time frame. And then if you decided to buy at this price, which is 114.5213.9, you decided to buy, not to sell. You buy. When you buy, what you are saying with the $1 versus ZAR, which is the rand, you are saying to the market that I'm buying with my $1, I'm saying ZAR will lose power. When you're buying, you are telling USD that you will lose power. With my $1, I will gain power. It means that you are buying you are buying the USD ZAR with $1. You are buying ZAR with $1, telling USD that you will now you are buying USD. When you are buying $1 to ZAR, you are buying at this price, and then the market moved. When the market moves, it moves from point A here to point B here. You have profited. How much money you're gonna profit? We are not gonna focus on that now. We are gonna focus that we have profited from this point to this point. We have profited, and we have waited 4 hours for us to profit. We have waited for 4 hours for us to profit, and we are bought here. But if ever you sold here, which means that you placed a sell, you were gonna lose. You were going to lose from here to here because your predictions they didn't go as expected. You're going to lose because of that. It moved up, meaning that when you sold, what you are saying, what you are saying when you are selling, you are saying that with $1, ZAR will gain power over USD. When ZAR gain power over USD, it doesn't matter where this price is. It can be at 20, and then when the ZAR gain power, it will go to maybe, let's say, 15 down. It's going down when ZAR gain power, which is the rand. When ZAR gain power, which is the rand, is moving down. However, if the ZAR is going up, it means that it's losing power over 1 USD. That's why you will see it costing 15, 14, 13 sometimes, and then maybe sometimes 18 on top there. It can cost a lot. So that's how it works. But then again, for you to have a mind of understanding where to buy, where to sell, that's another video for another day, where I can just do a lesson of a strategy, because that's when you will need to have a strategy of where to buy, where to sell. And the last thing that I have to explain is that you won't lose as like the way I explained, that you're going to lose from point A to point B. We have what's called stop loss and take profit. Stop loss and take profit. Stop loss stands for when it doesn't go in your favor, it will automatically cut a loss. For example, you can put a stop loss here, you sold here, and then when it reaches here, it's gonna close your loss. That's more loss. But if ever you bought here, you put a take profit here, it's gonna take profit when it reaches this level. If ever, let's say you are not in the market, you are somewhere doing something else. That's how it works. If you have anything to ask me, comment or subscribe, like, appreciate anything at all, just let me know what you have in mind. I believe that together we will do more. God bless everybody. Yours truly, was a trader, signing out.